Governor Gavin Newsom quadruples mortgage relief to $100,000 per household while accusing the Trump administration of abandoning California wildfire victims. This is not a press release. This is the fourth funding request since February, and we have federal disaster aid stalling while LA firestorms are still burning. CalAssist just went from 3 months of mortgage coverage to 12 months. Paid directly to servicers. If you are a California homeowner in a disaster zone, or you are watching insurance premiums spike statewide, this expansion changes the math on whether you can rebuild or walk away. Applications are surging right now. Here is what you need to know before the eligibility window tightens. Look, if you are tired of clickbait headlines that promise you the world and deliver nothing but recycled talking points, you are in the right place. I am not here to waste your time with fluff or tell you what you want to hear. I am here to give you the ground truth on what is actually happening in California right now, because the mainstream media is going to spend 3 days debating the politics while you need to know whether you qualify for relief today. So if that sounds like the kind of intel you need, hit that subscribe button right now. This is your early warning system for California policy shifts, and we are about to break down exactly what this mortgage relief expansion means for you, your property, and your future. Let's get into it. This is not another disaster relief story. This is the collision of 3 systemic failures happening in real time: wildfire insurance market collapse, federal state disaster funding breakdown, and California's shift towards self-funded recovery infrastructure. The information threat? If you are a California homeowner, renter, or investor, the old assumptions about federal disaster aid are dead. They do not work anymore. The system that your parents relied on, the system that textbooks told you would always be there after a disaster, that system is disintegrating right in front of us. And the opportunity? Understanding how CalAssist eligibility works and what this expansion signals about the next 18 months of state policy. Because this is not just about fire victims getting help. This is about California fundamentally restructuring how disaster recovery works in this state. Every other outlet is framing this as Newsom helps fire victims. That is the lazy headline. That is the surface-level read. We are framing this as California builds a parallel disaster economy because the federal safety net is disintegrating. We are connecting the dots between mortgage relief expansion, insurance market exodus, and the political feud over federal funding. No one else is asking the obvious question: what happens when California runs out of money to cover federal gaps? And let me bust a myth for you right now. The myth is that federal disaster aid always arrives quickly for major events. The reality? As of February 2026, Newsom has submitted 4 funding requests since February, and supplemental disaster aid remains stalled. The federal government is not a reliable partner in California disaster recovery anymore. States that assume federal backstops are planning for a system that no longer functions at the speed or scale required. That is the reality we are operating in. So let me tell you exactly what just happened on February 12th, 2026. Governor Newsom expanded the CalAssist mortgage relief program from 3 months of coverage to 12 months, with a new cap of $100,000 per household. Payments go directly to loan servicers for qualified disasters, including the 2025 LA firestorms. Now let me break down why that matters. Previous recipients under the 3-month program can apply for extensions. That means if you already got help, you are not locked out. You can go back and get more. Eligibility covers households affected by qualified disasters. Applications are processed through CalAssistMortgageFund.org or by calling 800-501-0019. Write that down, CalAssistMortgageFund.org, 800-501-0019. The expansion comes as LA firestorms continue to displace thousands of residents and federal supplemental disaster aid remains in limbo. We are not talking about fires that happened and are over. We are talking about fires that are still burning while this announcement was made. Now here's what this really signals. This is not just an expansion. This is a signal that California expects federal aid to remain unreliable for the foreseeable future. Think about what it means when a state government extends coverage from 3 months to 12 months. 3 months implies that federal help is coming soon, that this is a temporary bridge. 12 months implies that you are on your own for a year. By extending coverage to 12 months, the state is essentially saying, we cannot count on Washington to move fast enough. And the question becomes, how sustainable is this model if fire seasons worsen and federal funding continues to stall? What happens to state disaster reserves if this becomes the new normal? Because California does not have infinite money. The general fund is not a bottomless pit. Every dollar spent on mortgage relief is a dollar not spent on education, infrastructure, healthcare. So we are watching a reallocation of state priorities in real time. But the expansion is only half the story? Newsom did not just announce relief. He launched a direct attack on the Trump administration's disaster response. And this is where the political battle gets ugly, because Newsom accused the Trump administration of turning its back on California wildfire victims, calling the federal response a disgrace and a lie. This marks the 4th funding request Newsom has submitted since February 2026, with no movement on supplemental disaster aid. Let me put that in perspective. 4 requests, 0 action. Newsom traveled to Washington, D.C. in December 2025 to advocate for federal wildfire funding. That was 2 months ago. Since then, the federal disaster supplemental package has stalled in Congress. Meanwhile, the Trump administration issued prior orders prioritizing rebuilding over direct financial aid, a policy stance that conflicts with Newsom's push for immediate cash infusions to state disaster programs. The governor is now framing federal inaction as deliberate abandonment. Now let me tell you what is really happening here, because this is a calculated escalation. By publicly calling out Trump during a disaster relief announcement, Newsom is doing 2 things. First, he is inoculating himself against future accusations of state budget mismanagement by blaming federal shortfalls. If California runs out of money, he has already established the narrative that it is Washington's fault. Second, he is positioning California as the victim of partisan federal neglect. Which plays well with the Democratic base and sets up a 2028 presidential narrative. But here is the risk. If federal aid does eventually arrive, Newsom looks like he overplayed his hand. If it does not, he has correctly diagnosed a systemic breakdown and California taxpayers are stuck with the bill. This is high-stakes poker. Newsom is betting that Trump will not budge and that voters will remember who stood up for them when disaster struck. So the political theater is clear, but what does this actually mean for California homeowners trying to rebuild? Let me break down the numbers because this is where it gets real. $100,000 in mortgage relief spread over 12 months translates to roughly $8,300 per month in maximum coverage. For context, that covers a mortgage on a home valued at approximately $1.2 million to $1.5 million at current interest rates. Now, the median home price in LA County hovers around $800,000, meaning most affected households would see their full mortgage covered under the new cap. Payments go directly to servicers, keeping loans current and preventing foreclosures. This protects homeowner credit scores and maintains property tax revenue for local governments. It also keeps mortgage-backed securities stable by reducing default risk in disaster zones. Here is the hidden play that nobody is talking about. By preventing foreclosures, California is indirectly propping up property values in fire-prone areas. Think about what happens if thousands of homes go into foreclosure simultaneously. You would see a market collapse in disaster zones, which would crater tax revenues and destabilize regional economies. Property values would plummet. Municipal budgets would implode. You would have a cascading failure across multiple systems. So this is not just compassion. This is economic self-preservation. The state is choosing to absorb short-term costs to avoid long-term market chaos. But the question remains, how many fire seasons can California afford to do this before the math breaks? How many years can the state write checks for $100,000 per household before the budget cannot sustain it? And this brings us to the elephant in the room, the insurance market. Because even if the state covers your mortgage, who is going to insure your rebuilt home? Major insurers have been pulling out of California's high-risk fire zones for the past 2 years. State Farm, Allstate, and others have non-renewed hundreds of thousands of policies. The California Fair Plan, the insurer of last resort, is overwhelmed and underfunded. It was never designed to be the primary insurer for this many people. Even with mortgage relief, homeowners face the reality that rebuilding in fire zones may be impossible without affordable insurance. Premiums in high-risk areas have doubled or tripled, and coverage limits are often insufficient for full replacement costs. Newsom's mortgage relief does not address the insurance gap. It only delays the reckoning. This is where the CalAssist expansion starts to look like a Band-Aid on a bullet wound. You can cover someone's mortgage for 12 months, but if they cannot insure the property at the end of that period, they are still forced to sell or walk away. The real policy battle is not over mortgage relief. It is over whether California can force insurers back into the market or whether the state needs to create its own public insurance option. And that fight is coming in the next legislative session. You are going to see bills introduced that try to compel insurers to cover high-risk areas. You are going to see proposals for a state-run insurance program. And you are going to see massive lobbying from the insurance industry to block all of it. That is the fight that determines whether California remains insurable. So where does this leave California homeowners right now? Let me tell you what you should actually do if you are affected. If you were affected by the 2025 LA firestorms or other qualified disasters, you need to apply through CalAssistMortgageFund.org or call 800-501-0019. Previous 3-month recipients can apply for extensions under the new 12-month program. Do not assume that because you already got help, you are done. You can get more. Applications are surging. The state is processing requests on a rolling basis, but expect delays as the system scales up. You will need documentation of disaster impact, mortgage statements, and proof of residency. The program prioritizes those who lost primary residences or suffered significant property damage. Here is what to watch. If application volume exceeds state funding capacity, expect eligibility criteria to tighten or processing times to extend. The state has not released a cap on total program funding, which means this could become first come, first served if demand spikes. Do not wait. If you qualify, apply now. I am serious. Do not put this off for a week thinking you will get to it later. The system could change. Funding could run out. Eligibility could narrow. Apply today. But beyond individual relief, what does this expansion mean for California's broader political and fiscal trajectory? Let me zoom out for a second because this is important. California is quietly building a parallel disaster recovery system because federal aid is no longer fast or reliable enough. CalAssist is just one piece of a larger strategy that includes state-funded debris removal, housing vouchers, and rebuild grants. Over the past 3 years, California has increased state disaster spending by billions, while federal reimbursement rates have declined. FEMA cost-sharing formulas are under constant negotiation, and supplemental disaster packages in Congress are increasingly delayed by partisan gridlock. California cannot wait 6 to 12 months for federal money to flow, so the state is fronting the costs and hoping for eventual reimbursement. This is unsustainable without major tax increases or budget cuts elsewhere. California's general fund is not infinite, and disaster costs are accelerating due to climate change. Either the federal government steps up with reliable, fast-moving aid, or California faces a choice: raise taxes, cut services, or let disaster victims fend for themselves. Newsom is betting that public pressure will force federal action. But if Trump calls his bluff, California is stuck holding the bill, and that has implications for every taxpayer in this state, whether you live in a fire zone or not. Because when the state spends billions on disaster relief, that money comes from somewhere. It comes from education budgets. It comes from transportation funding. It comes from health care programs. Every dollar spent here is a dollar not spent there. And that brings us to the political calculation behind the betrayal rhetoric. This is not just about disaster relief. This is about 2028. By framing Trump's inaction as a betrayal, Newsom is positioning himself as the defender of disaster victims against a hostile federal government. This is a 2028 presidential play disguised as disaster relief. Newsom has been escalating his public feud with Trump for months, suing over EPA waivers, challenging federal immigration enforcement, and now attacking disaster aid withholding. Every move is designed to build a narrative: California versus Washington, blue state versus red federal overreach. If Newsom runs in 2028, this is his resume. He is the governor who stood up to Trump, who protected Californians when the feds abandoned them, who built a state-level safety net when the federal one collapsed. It is effective messaging, but only if the disaster relief actually works and the state budget holds. If California runs out of money, or if the relief program fails to deliver, this entire narrative collapses. High risk, high reward. Newsom is making a bet that voters will reward bold action even if the fiscal consequences are severe down the line. So what should you be watching over the next 30 days? Here is the speculative outlook. Watch for application volume data. If CalAssist is flooded with requests, expect the state to release updated eligibility criteria or funding caps. Watch for federal supplemental aid movement. Congress returns soon. If disaster funding passes, Newsom's betrayal narrative weakens. If it stalls again, he looks prophetic. Watch for insurance market developments. If more carriers exit California fire zones, mortgage relief becomes meaningless because homeowners cannot rebuild. Watch for legislative session activity. Expect bills addressing state disaster funding, insurance reform, and federal cost-sharing formulas. And watch for Newsom's next move. He will keep escalating the federal feud unless Trump backs down or Congress acts. Watch for more public attacks tied to disaster aid. The key variable is this: can California sustain this level of disaster spending without federal reimbursement? That answer determines whether this is a temporary patch or a permanent shift in state fiscal policy. If the answer is yes, we are witnessing the birth of a new model where states self-fund disaster recovery. If the answer is no, we are watching the prelude to a fiscal crisis. California just quadrupled mortgage relief to $100,000 per household while publicly accusing the Trump administration of abandoning wildfire victims. This is not just disaster aid. This is California building a parallel recovery infrastructure because the federal safety net is disintegrating. If you are a homeowner in a disaster zone, apply now through CalAssistMortgageFund.org. If you are a California taxpayer, understand that the state is absorbing costs that were historically federal responsibilities. And if you are watching national politics, recognize that this feud is a preview of the 2028 election cycle. The stakes are real, the money is real, and the political battle is just beginning. If you want to stay ahead of California policy shifts, insurance market exits, and federal state funding battles, this channel is your early warning system. We are not here to editorialize, we are here to connect the dots before the mainstream media catches up. Subscribe if you want the ground truth on what is actually happening in California right now. No fluff, no filler, just the information you need to make informed decisions about property, policy, and politics. Next video drops in 72 hours. See you then.